Welcome to part 4 of our 5-part series on investing in real estate with little to no money down. So the fourth option that we're going to talk about today is hard money loans. So this is a situation where a hard money lender is typically a private money lender. So they don't have all of the rules and regulations that a major bank will. They don't have all the guidelines that Fannie Mae and Freddie Mac and FHA and VA require, because it's, literally some person or entity loaning money on essentially a private basis. So it's a private money lender. And because the private money lenders are not subject to the same guidelines as the institutional lenders and the government-backed lenders, they are able to loan the money on much friendlier guidelines. And a big key to this is the hard money lenders typically loan the money based on the property, not on the borrower. So for example, in a fix and flip situation, a lot of hard money lenders, what they'll do is they will loan you a percentage of the after repaired value. As our example, let's say a lender is offering to loan you 70% of the after repaired value. Well, if the after repaired value, if after you fix it up, let's say the value is $500,000 after you fix it up, well, that means I'm willing to loan you $350,000. And let's say the property is going to cost $50,000 to fix up. Well, if you agree on a purchase price of the seller of $300,000, I, the hard money lender, am willing to loan you. It doesn't matter. I don't care about you and your profile. I care about the property. I will loan you money based on an after repaired value. So if you're under contract at $300,000 and I, the hard money lender, am willing to loan you $350,000 because that's 70% of the after repaired value, in that structure, I will be able to loan you the $300,000 plus an additional $50,000 that you can use for repairs. So if you're a buyer and you're able to structure a purchase with a seller in a fashion that's similar to this, a hard money lender using, these guidelines or something similar will allow you to borrow the acquisition cost and the price of repairs. So in that case, as the buyer, you just bought the house and fixed it up for no money, and all you have to do is, you sell it for $500, minus your holding costs and closing costs, and then you repay them back the $350, and boom, the rest is all profit. So structuring a fix and flip deal in the right way with a hard money lender is another way that you can come out of pocket with little, or get into investing with little to no money out of pocket. One caveat to the hard money lending game is that because it has, kind of these options of flexibility, it comes at a price, and the price is typically a higher cost, meaning some points up front, and a higher interest rate. So it's going to be more costly. They're typically on shorter terms, 6, 12, 18, maybe 24 months. It's rare that they'll go out to 36 months. So it's one of these things where they're going to loan you money at a high price for a short period of time to allow you to get your investment done. So just make sure that when you're working with a hard money lender, that you know your time frames, that you know the cost of the capital, and that you know when the repayment term is, because if they put you on a 6-month repayment term and it's going to take you 9 months to do the project, well, that could get very dicey, and you're either going to have to refinance and pay the cost of the capital again, or you'll be potentially facing foreclosure where the hard money lender can, potentially take the property back from you. So you just want to make sure, again, like with all of these different things, whether you're just traditionally buying and selling a house or you're doing one of these creative investing methods, you want to make sure that your paperwork is ironclad, that you fully understand your rights and responsibilities, because although hard money lending sounds great, wow, they'll give me all the money to do it, anything I need, and I can keep all the profit. Yes, but it comes at a price, and that price is the cost of the money, but also tends to be stricter terms. So make sure that, when you're reviewing your hard money loan documents, that you just are aware of all your rights and responsibilities.